The first of our Spotlight On sessions now, with Spotlight on the sustainable finance outlook for the residential sector. And in a way, this follows absolutely and beautifully on from what Alistair was talking about, because increasingly the key to getting finance is ESG, and not just the E, actually, the S and the G being really important as well, convincing investors that your development is founded upon those environmental things, which are now increasingly important, but also, as we've been discussing, the social and governance values and principles that are so key. And social responsibility is not a nice to have, not a nice to have. Mr. Unilever's fourth G, it seems to me, is probably the most important G of all these days. As our next two speakers are going to explain, please welcome from Lloyds Bank's Real Estate and ESG Finance Groups, Nicola Haigh and David Willock.
Thank you. And good morning. Lloyds are delighted to be here to support RESi360. It's a great opportunity to bring together such a wide-ranging sector at a time where there's both a lot of changes, both economically and geopolitically, which is a trend that I know a number of people in this room are seeing and feeling. We have a number of colleagues around the room, so if there's anything you'd like to discuss with us afterwards, we're here or at our stand as well. But most importantly, we remain committed to supporting the residential sector, and in particular through three core pillars which we look at it through, and that's sustainability, accessibility and supply. So in line with our Helping Britain Prosper purpose, we're committed to more people accessing secure and sustainable quality homes. We're not only one of the UK's largest mortgage lenders, but also provide support for social housing, investment properties and development financing, and also have our housing growth partnerships and Citra showing our full commitment to the sector. I touched on sustainability being one of our key pillars, and we're continually evolving our proposition. And we've most recently introduced tools such as our Green Building tool, which works with clients to look at the EPCs of their buildings and effectively how we can try to help. And then we also have our what's known as our Clean Green Financing Initiative as well, to support arrangement fee-free financing to further help clients along this journey. But to delve deeper into this, I'm delighted to introduce David Willock as MD and Head of ESG to bring to life the importance of this for the sector.
Super, thank you, Nicola. Right, see if I can get this to work. Okay, so great to be here. You'll be pleased to know I haven't got loads of time, but what I'm going to try and do today is give you all something to take away about sustainable finance and hopefully get a sense of why it's important, even if you're not at the front end of raising finance, if you're in the supply chain, what's happening and why does it matter. So I'll start with this, why are bankers talking about decarbonisation? And you'll remember COP26 last year, lots of different announcements, but a really important one was about the Glasgow Financial Alliance for Net Zero, or GFANZ. And what this basically is about 140 trillion of assets now committed to various streams of this. And what this effectively means is banks, insurers, asset managers, potentially where you get your equity or your debt, are saying, we are going to align our portfolios, our investments to a net zero scenario, 1.5 degree. Super important because that's aligned with the UN, it's aligned with the science, but it's also very difficult to do. And we're now working through that. And the good thing is it's not one of those never, never sort of commitments. These things have sequential requirements year on year. And this is important because we're now working through the high intensity sectors like oil and gas, etc. But housing and the built environment is an intense sector. So this is going to be important about how money flows and pivots into this sector going forward. Hopefully this is going to work. So I'm clicking next. Can you move this slide on? Ah, super. So I'm not going to go into this one in massive detail, but just to underline what Nicola said. So why are Lloyds talking about this? Well, you can see here across the different business lines, the built environment is a massive part of what we do. So not just on the mortgage side, we're one of the largest lenders to house builders, one of the largest lenders to social housing, as well as some other facets that Nicola mentioned. So if this is a topic that's of interest to you, no matter where you are on that journey, please come and have a chat with us, because I'm sure we can find some use in that. Just going on to the next one. Sorry, it's a bit sticky there. Ah, here we go. Oh, super, cheers. Right, so what does this mean right now? So what we've seen is a growing trend of sustainable finance propositions. We can get in, there's going to be some time for Q&A, we can get into what that means, but we're seeing a big growth in sustainable finance propositions, not just at Lloyds, but elsewhere in the market. I think what we're also seeing is the step up of standards. So what does green mean? What does sustainable mean? I think we're now seeing that go into both the equity side and the debt side. And if you're in the supply chain, you'll start to probably see that push forward and push down the supply chain as lenders and equity investors sort of are asking more questions, really, as standards sort of creep up. And obviously future home standards we'll talk about. It might, and is starting to lead to tighter policies. So some of the requests, some of the conditions of lending are starting to change. And again, this is important because it all goes to, accessibility of capital. Okay, so I'm just waiting for this next one. So on that note, so this isn't a brand new thing, but you can see here on the chart, which is pretty evidential, the growth of sustainable finance. And I'm going to touch on a little bit about what that actually means because it's quite a nebulous, broad term. But you can see on this chart, the massive step up in sustainable finance in 2020, 2021. We did wonder, will it continue in 2022? Because COP26 was very much a big event. Is it going to curtail off? Absolutely not. Markets, financial markets are a bit subdued in terms of capital markets, but actually we've seen that trend continue. And I just want to put up a couple of things to bring it to life so you can see some examples here of transactions we've worked on. Things like Hill Group was the first sustainability-linked loan in the sector. Barclays came to the markets, green bonds. You can see social housing, huge flow of sustainability-linked financing there, all the way through to the construction side. So this is a trend that we've seen in 2021 and very much see it continuing in 2022. Now, this is a really busy slide, so only the front row will probably be able to read this, but I just wanted to break it down. You don't have to really read that, to be honest, because I'll just speak to it. Sustainable finance, what does it mean? In effect, there's two sustainable finance sort of instruments. The first is what we'd call like use of proceeds. It's quite simple. The loan is used for a qualifying purpose. So it could be to build a green building in this context or social housing. There's a number of different categories that qualify. So that's one on the left. The other element of sustainable finance is about the loan can be used for whatever, the general corporate purpose, but then there are certain KPIs or key performance indicators that go alongside that. The companies, and this has been really prevalent in this sector and others, they commit to improving certain criteria. It could be carbon intensity of their buildings, it could be something like water, it could be biodiversity net gain, it could be on the social side. So I just wanted to sort of break that down a bit because there can be a bit of confusion in the market, but there's those two main pillars that we're seeing emerge. Just click on a sec. Okay, so I just wanted to highlight this. So it's really dense, the topic of sustainability, and I can understand some people say, look, it's got too much, there's too many acronyms, there's too many standards, don't know where to start. And we're in the same boat, so it is complicated and quite confusing. But I just wanted to highlight a couple of things. Next Generation Initiative, we became executive committee members, and I'm on that committee, and we worked with them. It's been there for 10 years. It is a public listing of how they rate the top 25 house builders, but we've now expanded that out into mid-sized house builders, but also crucially SME house builders. Now, the reason I'm signposting this, it's all publicly available, and that's a really important topic in sustainability about transparency. So you can go on there, you can see what all the standards mean, and crucially as well, it's not just about carbon, it goes way beyond carbon. So I just wanted to call that out. If you're interested in social housing, there is also the sustainability reporting standards, which again is transparent, publicly available. You can go and look at that. And going into the investment side, it gets a bit more complicated because you've got things like RESi and a real mix of different ways of assessing sustainability. So I just wanted to call that one out. Now, on this theme of transparency, sustainable finance, lots of people define it differently, but we decided to publish what we call sustainable finance. So if you get really bored, you can go to this link here and you can read our sustainable finance framework. And the reason we did that, we talked about it and thought about it long and hard, we want to drive change. So we could have kept it to ourselves and not published it, but we actually published it so our competitors can look at it, our clients can look at it, our stakeholders can look at it. So that's a useful document. And just for transparency, we also got it second party approved by a third party that sort of show that it aligns with best practice. So where are we going next? There's been an incredible focus on carbon, rightly so, and what's a green home and net zero homes. But as the previous speaker talked about, the impact on the sustainability context of the built environment is so much broader than carbon. So it's really, what is a sustainable home? I think that's the big conversation. Future home standards, obviously on the development side, it's tough, and I think people are trying to work out how they're going to comply with that and how that's going to work into financing as well. I think the previous speaker talked about place. I think we're seeing more and more people talking about place-based investing, and I think one of the speakers later on from the Good Economy will probably touch on that. So that's an interesting topic we're seeing next. And I'll just leave you with this. For those of you that are a bit more au fait with some of the topics, these are the three big headings that I think about, which is intentionality. This is really not just building to regs, not just building to the appraisal. We are intentionally doing something different in a sustainability context. Very important. Additionality, again, it's about not just BAU, delivering things that we didn't have to do. These are additional social outcomes. These are additional variables in a sustainability context. And finally, I think that the last speaker talked about economic sustainability, which is important. It's this concept of intersectionality. So these topics are all interlinked: nature, environment, carbon, homes, delivery, economics. And I think that makes it a bit meatier, but I think it makes it interesting as well where that goes, because unfortunately there isn't a tick box exercise to get all of this stuff done. And that's the disclaimer. So I'm just going to leave that up there for a little bit if anyone wants to read that. But I think that's us done, isn't it? So thank you very much
indeed. That was excellent.
What do you want to do?
Just pick a chair. I don't mind. I'm not fussy. Thank you very much indeed for that. A lot of words on the screen. Hopefully the slides will be available for people afterwards. Or does your disclaimer mean that it's
I'll have to check the disclaimer, but I'm sure
right, okay. Well, maybe you haven't got any quick sneaky shots on their iPhone, then we're in business. But I wanted just to, and what's interesting, I think, is I hadn't quite clocked the way in which the sort of investment banking community had signed up to all those different initiatives, and the way that then that feeds down into the way that you're investing in different sectors. And I guess, you know, we've been talking about, you know, ESG as, oh, we have to do this, but actually it's not a nice to have anymore. This is absolutely central. If you want to get any finance, you know, really in serious money, you're not going to get it unless you can convince people like yourself and those who are looking at what you're doing that actually this you know goes above the bar.
Yeah, well, I think, as you know, people will have seen in the audience, ESG is getting quite a tough ride actually in the press. There's lots of different opinions, and I think, just for the record, obviously ESG is a risk framework. It's a way of assessing risks, and I think unfortunately people are conflating ESG with maybe sustainability with impact. But I guess you're exactly right in that, you know, these commitments are public commitments, you know, 140 trillion of assets aligned to them. And yeah, as we work through those, it will start to pivot capital, and it will, I think it's important to see it as a continuum, both as, you know, certain sectors will go through this earlier, but also different banks and different agents will act differently through that process. But absolutely, you know, we've seen it in the way we've differentiated pricing. In certain sectors, it will differentiate outcomes in terms of, you know, the amount of leverage, etc.
Nicola, I mean, we're at this very strange time where we've got a new government. We're going to be sort of, well, we're hearing all kinds of little bits of potential gossip about what might be in Friday's mini budget and all the rest of it. But what people obviously across the country know is that we're going to be facing are facing significant financial headwinds. We've got a government that seems absolutely focused on growth. Finds some of the regulation that's come in over the years, a lot of it around this sort of environmental area, you know, problematic. What's your assessment actually of how things are likely to play out? Is the sort of COP26 juggernaut just going to ride over it, or are we going to see a period where politicians are going to come in and say, oh, well, don't worry so much about you know, putting sewage in the sea or whatever it might be?
I mean, I think it will stay such a key topic in terms of both the political agenda, but also with businesses. And we're seeing it more and more. So from the finance side, we're helping support clients go through that journey, because what we do know, and David touched on it in his presentation, that sometimes there can be so many different layers to it, and which parts do which clients focus on. And that's where we've tried to develop some tools and frameworks that are not only accessible to some of the larger businesses that maybe have specialist teams, but also how the SMEs also help.
How would that actually work in practice? A small building firm, say, how would they engage with that?
So there's a combination of things. So we've got what's known as our green building tool, which is a great tool that's available where we can look at the EPCs of client buildings, how potentially we could help to improve those as well, because we know some of the legislation is evolving in that sense as well.
Certainly is.
Then we've got, I mean, we touched on there the next generation framework, which was initially done with the 25 largest house builders. That then moved through, so what we've now got is a project-based one where we can work with smaller house builders, developers, to really sort of help have a framework, which we call it our benchmark standards, where there's a sort of number of different themes that they can look to achieve to then get a different accreditation to that, and then we help support the finance.
Is it essentially, you know, if you want to borrow money from us, you need to be hitting these things? Is that how it works?
Yeah.
So I think at the moment, I did have on the slide, but I took it off. There's a sort of, you know, simple sort of carrot and stick sort of scenario where I think we've had an era now where banks and capital providers have tried to incentivize. Yeah. You know, so in our case, we have a discounted proposition. So it's not a case of saying you can't access capital. Obviously, we have our minimum standards, which are ever increasing. But this is about, for those that do want to go that extra step, there are ways of accessing cheaper financing. And I think what we've tried to do consciously is, this is a really dense topic, and SMEs have got a lot on their plate, generally, not just in this sector.
Expertise is what you could offer.
Yeah. So we've tried to just tailor it based on that sort of curve of where they are in terms of readiness. So in that space, we might look at tools like Nicola mentioned, or education, or access to resources. As we get to the top end, things sort of change a little bit.
And just going back to what Alistair was talking about, do you think things have changed? You think that purpose and profit are almost equal now? That there's sort of a sort of philosophical shift in the way that business and banks operate?
Do you want me to?
Yeah.
So I cover all sectors, so I don't just cover, you know, I run the sustainable finance team across all sectors, and I think it's fair to say, you know, I speak to CFOs and treasurers across all sectors, and, you know, the conversations we have now about sustainability and purpose are incredibly more frequent than they were sort of 5-10 years ago. Almost every meeting in some, now there is a degree, you know, we're at a really tough point now economically, so I think we will start to see.
Well, I wonder about that.
Fall away, and I think I say, you know, this is the rubber hit the road sort of moment for sustainability, in that there's going to be plenty of friction points over the next 12 months. Say, you know what, we can't quite afford that. But I think the sense I get is people are in this for the long term. They can see the long term value. And I think that comes back to end users, but also what their stakeholders are seeing. You know, I put up there about something like weights. You know, we're seeing that go into the supply chain. You know, the request to have science-based targets. So personally, I don't feel like it's going anywhere, but it will come under pressure in the next couple of years.
Interesting times ahead. Thank you very much indeed to Nicola and David. Thanks very much indeed. Nice to see you.